Over the past 10 episodes, we've built something together, a complete research toolkit for the everyday investor, powered by AI, completely free, and built on the same frameworks that professional analysts use every day. Today, we're putting all of it together. I'm going to walk you through a real full portfolio review from start to finish. We're going to take a single stock, NVIDIA, and run it through every tool we've built on this channel. By the end of this episode, you'll see exactly how these 5 skills connect into one repeatable research process you can use every single week. Let's get into it. Welcome back to the AI Portfolio. I'm your host, a CFA charter holder with years of professional market experience. This channel gives everyday investors the same tools and thinking that used to be reserved for Wall Street. Free every week. Nothing here is financial advice. This is a research skill. Let's build it. All right, here's the 5-step process we're running today. Step 1, screen and discover. Step 2, read the earnings. Step 3, compare to a competitor. Step 4, value the stock. Step 5, write the memo. These are the 5 skills we've built together. Today you see them work as one system. Step 1, screening and discovery. Go to finviz.com. Open the stock screener. We covered this in episode 4. The goal is to filter thousands of stocks down to a short list worth researching. Set your filters: market cap over 10 billion, revenue growth positive year over year, gross margin above 40%, and analyst rating of buy or strong buy. NVIDIA will appear on this list. It's been a consistent name through every filter I've run over the past year. Write it down. That's your research target. Step 2, read the earnings. Open ChatGPT or Claude. Go to NVIDIA's investor relations page and find their most recent earnings press release. Copy the full text and paste it into AI with the 5-point earnings prompt we built in episode 5. What comes back? Revenue grew 122% year over year. Gross margin expanded to 73%. EPS beat analyst estimates. Management guided higher for next quarter. And the single biggest takeaway, the data center business is the engine driving everything, and it's showing no signs of slowing down. That's step 2, done in 5 minutes. Step 3, head-to-head comparison. NVIDIA's biggest competitor in the AI chip space is AMD. Run the 2-prompt comparison we built in episode 6. Data gathering first, then the comparison. What AI tells us, NVIDIA is the stronger grower by a significant margin. AMD has better value on a price to earnings basis. NVIDIA has higher gross margins and a wider moat in the data center. AMD is the lower risk option given its more diversified product mix. Overall, NVIDIA wins on growth and dominance. AMD wins on value and risk. Now you have context. You're not just looking at NVIDIA in isolation. You know how it stacks up against the alternative. Step 4, valuation. Run the DCF prompt from episode 7. Use NVIDIA's most recent annual free cash flow as the starting point. Assume 20% growth for years 1 through 5, conservative given recent results, and 10% for years 6 through 10. Discount rate 10%, terminal growth rate 3%. What comes back? Intrinsic value per share of approximately $750 to $850 depending on assumptions. Compare that to the current stock price, and you have your answer on whether it's cheap, fair, or expensive right now. Run the sensitivity table to see how the value shifts under different growth scenarios. That range tells you everything about what the market is pricing in. Step 5, write the memo. Pull up ChatGPT or Claude one more time. Run the 6-section investment memo prompt from episode 8 with NVIDIA as the subject. What you get: a 2-sentence company snapshot, a clear investment thesis centered on AI infrastructure dominance, a metrics table showing the key numbers, 3 genuine risks, valuation, competition from custom chips, and cyclicality. A valuation section with your DCF number, and a bottom line. My bottom line on NVIDIA, based on this analysis: buy. The growth rate justifies the premium if you have a 3 to 5 year time horizon, but position it as a tier 2 holding given the valuation. That's the full 5-step process, from screener to memo, using 5 free AI tools in under an hour. Here's what I want you to notice. Each step built on the last. The screener identified the name. The earnings analysis validated the business. The comparison gave context. The valuation gave a price anchor. The memo synthesized everything into a decision. That's not luck. That's a process, and a process is repeatable. Your homework this week: pick any stock from your Finviz watch list and run all 5 steps. Not just 1 or 2, all 5. Then post your bottom line sentence in the comments. 1 sentence: buy, hold, or avoid, and the single most important reason. I read every comment and I reply to as many as I can. This channel exists because I believe everyone deserves access to professional grade research tools, not just the people who can afford a Bloomberg terminal or a Wall Street research subscription. You now have a process that rivals what most retail investors will ever use. Thank you for being here for these first 11 episodes. Subscribe if you haven't already, and I'll see you in the next one.